Welcome back to Fear-Free Passive Investing, everyone. My name is Lucas Miller, host of this show. And on this show, we help busy professionals navigate the world of passive commercial real estate investing. Today's show is awesome. It's an interview with a passive investor and a really good friend. Her name is Maggie Cheung. And Maggie was born in Hong Kong, actually, and moved to the US with her family when she was 4. She grew up helping her parents' Chinese takeout restaurant, which is crazy because they're open 364 days a year. They take one day off. It's crazy. But her family really helped instill some great values with her. And as a career, she actually worked as an auditor in the banking industry. And you'll see how that kind of plays into her underwriting style for passive investing. But during this period, Maggie took time to research different types of real estate investing. And that's where she discovered syndicating. And since then, Maggie and her husband have invested in a total of 7 deals, 7 passive investments, which is crazy in the southeast of the US. But they've enjoyed the benefits of real estate investing, leverage, cash flow, tax savings, all kinds of stuff. Maggie wants to share her experience and the practical method that which she has chosen to kind of synthesize down to how she looks at deals, how she sees if it's something that she actually wants to invest in. And we get into a lot on this episode. But before today's show, I have a quick announcement. If you're interested in learning more about passive investing, or maybe looking at deals, or maybe just starting to get your feet wet, and you just want to take a look at some of these deals that are coming out, I really would encourage you to head over to fearfreepassive.com. And from there, you can sign up to get a free guide on syndicating deals, how I went from $0 to $40,000 a year in passive cash flow, how you can do that in less than 5 years. And so if you want to head over there to fearfreepassive.com, and you can sign up there from a little pop-up link. But if you just want to chat, you can always email me, fearfreepassive@gmail.com. That's my email. And I would love to just talk with you. I would love to help you out if you're going through some stuff. I've definitely been through a lot of different real estate investing types and ways to make money in real estate. So if you're just starting out or you have some questions, definitely reach out to me. I want to be a resource to the listeners. So now with that out of the way, let's get into the show and start talking with Maggie. All right, Maggie, welcome to the show. Thanks for being here.
Thank you, Lucas. Thank you for having me.
Yeah, appreciate your time. So for those who might not know about you, can you take 30 seconds, a minute, whatever you got, and explain who you are and how you got to this point?
Yeah, sure. It's like I mentioned in my bio, my family I'm a first generation from Hong Kong, and I grew up in small town in Delaware. My family owns a Chinese restaurant, so they work like 364 days a year.
That's
so
crazy.
That's the most active working life that you can be. And I spent some time in the corporate, being an auditor in the financial industry. And after having 2 young kids, it was just getting too daunting for both working parents and Wall Street, and just it's crazy hectic. So I took a step back and decided to kind of reevaluate what we want to do. My husband still works his full time. So basically during that time, we wanted to get involved in real estate. And we kind of took a lot of different turns and figuring out, okay, what type of real estate investing is the right fit for us. So, we own a couple properties, single family apartments, and we went to private lending, and then we kind of fall into syndication 2 years ago, and just kind of take a deep dive, and then we kind of and then now we have 7 syndication.
Wow.
So
you've been
never turned back.
7 passive deals.
Yes. Well,
That's
7,
incredible.
and that's the last one. We became more active. We went to GP side.
Right, and that's what you're trying to transition to now, is being more on the active side and trying to blend that.
Correct. Yes.
That's awesome. So how did you get comfortable with the idea of syndications? You've been an active investor. You've done, the single family home. You've done the hands-on approach. How did you get comfortable with trusting other people with your money?
Yeah, I definitely thought it was a scam
Yeah, for sure.
in the beginning. But I think I start kind of peeling back the layers and layers of it. I think what's important is that if I think we were only exposed to the traditional side of investing, which is just stocks and bonds and
Hmm.
mutual funds. And we were really trying to see, and we know that we couldn't create the wealth that we want. So we're trying to
Right,
figure out,
right.
okay, what is the way to do that? And in order to do that, I think the first step is just to unlearn everything you have
Hmm.
and then start from baby steps. For me, it's a little bit easier because I came from the financial background and audit, so
Right.
I go with a sense of trust but verify various sources.
Hmm.
So I don't know if that's kind of going to your question a little bit, but the first deal is obviously the toughest because you had to qualify a lot of information
Hmm.
and 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 to trust these sponsors, really you're giving your money away to someone else and you hope that they are doing the best will and honestly to create and return what they promise, or at least like don't lose the money.
Yeah.
So that's how I look at it.
That's interesting. So take us back to that first deal. Um, when was that, and what did you like about it? What did you see in it that you really wanted to invest in? And you don't have to mention names or numbers or anything if you don't want to, but definitely we want to hear about how you jumped into that very first one.
Yeah, definitely. So the concept of real estate syndication um, came up 2 years ago when I started to networking with a lot of different real estate investors and trying to figure out their
Hmm.
way of how they make it work and how they invest. So I just started connecting with a local syndicator, and she told me about real estate syndication, and started connecting with her, understanding what it is. And it's really, if I took a little step back, it's almost like a security, and um, and that's kind of what I'm familiar with because I'm coming from the financial world.
Hmm.
And so that type of security like gave me a little comfort because I know there is security exchange commission is
Right.
involved at some level. So there is, I guess there is some type of level, there's accountability there. So
And
that's
by
first
security,
layer.
you mean like not security like as in you feel safe. Security as in you're selling a security sanctioned by the
Correct.
SEC, the Securities and Exchange Commission.
Correct.
That's what you
Yes.
mean. You're comfortable. Okay, got it.
Yes. That's one of the layers. So I know
Right.
there's I guess you call the cops of in this world.
Yeah,
Yeah.
exactly.
And then I mean, of course, there can also be bad players. So you kind of
Right.
peel back another layer. It's like, okay, get to know and involve, get to
Hmm.
know about sponsors and who they are and what they do, what they stand for.
Sure, sure. So describe that first deal. How many units was it, or what did you
Um,
like about it?
I think it was, believe it's over 300 units, and then it's
Okay.
in Dallas,
Nice.
Dallas MSA. So it's pretty. I think there was a couple layer of comfort of it because it's in a large
Yes.
city. There are going to be people who needs to rent, and Dallas is a blooming city. Like there's a lot of jobs there.
Absolutely.
So and where the jobs are, the people need a place to live.
Yeah.
So I feel a little more comfortable in that. So it feels like a little easy to transition to get into the deals. I mean, I did my research on the market and I did my research on their property. I'd look at comps, or just on data that we can see on
Sure.
apartments.com and so forth. So things like that, like because I'm an auditor,
Yeah.
I go a little crazy, spreadsheets and everything,
That's good though.
um, and challenge their sponsors, and they were able to answer my question. So
Yeah.
okay, that seems reasonable.
Dallas 2 years ago, I imagine that deal is doing pretty well.
Yeah, that's pretty good.
Yeah.
It's doing well. It's been paying me, so
Yeah, that's good.
okay.
That's good. So you mentioned you did some research and you kind of really dove deep into that. I want to talk about some of the not necessarily more quantifiable things, but the how did you qualify your sponsor and know that who you were investing with was trustworthy? I know you mentioned, finding bad actors, but how did you find a
Yeah.
good actor?
Yes. Um, I started to kind of follow them, I guess, stalk them, and in the sense, in their show. Um, they're the first. I first look at, I guess, sites like Bigger Pockets, because that's a real
Right.
estate investor community. And then after that, I kind of like read some of the comments that came out, and any people who have invested in in their particular sponsor.
Yeah.
I also track their social media footprints, kind of follow them where they are going, and or what messages they're putting out, and
Hmm.
is it hasn't been consistent, um, and hasn't been consistent to that particular deal and how they look at that deal.
Right.
Um, and I kind of the third layer also, because I started talking to other people and networking with other people, I cross check a lot.
Yeah.
That's the type of auditor mindset. I just ask the same question from 10 people, and then if they give me the same answer, I say, okay, then it's most likely it's pretty reasonable.
Yeah. That's a good approach. I never thought about it's almost like cross-examination and talking to
Yeah,
multiple.
that was my job for like 12 years. So that's
Wow.
kind of like,
Okay, well, I mean that's great. How do you dive down deep into the deals? Because you're given financials when you try to
mm-hmm.
invest in deals. What steps do you take to try and, I guess, verify what they're trying to tell you as far as comparable properties, the value add strategy,
Yeah.
and where they think they can take things in rent?
Yeah, I think as a passive investor, I obviously there's a limit of information that you can really get from the sponsor,
Right.
but you could also get really overwhelmed once if you see the other side. So what for me for the first deal, uh, what's important is that if you can see that property on there's because there's tons of sites out there, apartment listing.
Hmm.
Um, when when you see their summary of what kind of comps that they're putting into that executive summary, I kind of go back and challenge that and see, okay, is that reasonable based on what I see on the public data on apartments.com?
Right.
If it's in line, and they also cite if they are a good sponsor, they should take an effort to kind of explain to you how they look at the market
Mm.
and how they look at that particular property, how is it performing. And I just cross-check with verifiable sources like the census.com can give you
Yeah.
comfort and market. And apartments.com and citydata.com is a very great source of information that kind of give you kind of idea, okay, what they said, and cross-check it from different sources.
Yeah.
And then if you see something different, it doesn't mean that it's a bad thing. You just go back and say, hey, I see this, and how do you think about this, and how is it considered in your performance?
Right.
Yeah.
Right. Because the passive investor might be overlooking something or looking at different data or something.
Right.
So it's important to just not shut down, but to then
Right.
go back to the sponsor. So if I were to summarize what you were saying, you can verify what they're saying about the submarket
Mm-hmm.
by checking city data, census data to look for, I assume, like population growth and job growth and things like that. And then if you're trying to verify what they think they can achieve in rents, you can look at places like apartments.com. Is that
Mm-hmm.
what you're saying? Okay.
Correct. Yes.
Good sources. Yeah, both all of it free to use, which is really helpful, and it's very easy to go on and check comps. So that's great. Um, I want to switch gears a little bit and talk how you got up to speed on this. I know you were an auditor and you had real estate investing experience. How did you get from I know nothing about syndications, it sounds like a scam, to putting your first money in? Like, what did you use to educate yourself? Were there books or podcasts? You mentioned talking with some influencer in the space.
Yes. Definitely. The first investment was, I think we took it as we did all our research upfront, and ultimately you still have to hand over the fork and give your money to someone. So
Yeah.
the bottom line was, I think what was attractive to the deal was that we didn't have to put in a lot. And the first one, it's like $25,000.
Mm-hmm.
So we look at it as, okay, if it works out, great. If it doesn't work out, maybe we can still have 25,000. If not, we lose it all, then it's not going to sink us. So
Right.
we try to go, okay, let's do a test and figure out like how it works. So far
Mm-hmm.
it's not good wood. It's been cash
Right.
flowing.
Right.
So
Right. Right.
we're really happy. So, and then
That makes
that's,
sense.
yeah.
Yeah. Okay. So that's a good outlook to it, especially if you can find a sponsor that's willing to take, sometimes less than the minimum. Sometimes the minimum is 25,000. Sometimes it's 50, but they might make an exception. So that's a good strategy to take. I kind of want to switch gears a little bit and talk and maybe this is too personal. If it is, by all means, but have you talked to your parents about what they're doing? Because if I think of an extreme, laborious job, I think of a restaurateur and especially if they're working 340 some days, you said, have you
64
talked to
days. They
them?
only have Thanksgiving
That's crazy.
day off, but they're retired now. So they still kind of do have a part-time, but
That's good.
sorry, what was your question?
Just have you talked to them about what you're doing with these passive
um,
investments and
I kind of, I started to have that conversation. I think they're still a little hesitant because they grew up in China, so it's
yeah,
really hard for them to concept that they still don't even have credit cards themselves.
yeah.
So this whole concept of like investing in syndication, it's just too foreign for them.
Yeah, and it's a tough thing to explain to someone who has worked very hard for
Yes.
their living for forever, right?
Mm-hmm.
To say there's a way to passively invest in something and grow wealth. You're right. It does sound like a scam at times.
Yeah. I mean, so and their method of real estate investing is in their own backyard. There's no way that they're want to invest in something that's few stakes away.
Yeah,
Yeah.
right. That's, I mean, that's a good question to be is how could someone who is investing in something, if you're in New York City and you're investing in something in Arizona or something, how can you get comfortable with that area so that you feel comfortable enough to having never seen the property, how can you get comfortable enough to wire money?
Yeah. I mean, I think it all comes down to, well, if you talk, there's three things that you qualify in each deal, right? So you look at the property itself. Is it a real property? You can try and look it up. And if it's a real property, then you can kind of verify some of the data points that I mentioned earlier.
Yeah.
And then you got to qualify the market, and the market you can actually source that information from somewhere and verify that information very easily. I think the hardest part is when it comes down to it, is just a sponsor, and because you're basically forking your money to someone else to entrust them, and
Right.
hopefully they are the steward of your money and take care of it. So, and I think that for that was the hardest qualify. I mean, there are some elements that we feel a little comfortable because they're security exchange commissions is involved
Mm-hmm.
on, and there is I guess deterrent for people who from committing crimes or doing
Yep.
fraud. There's some deterrent on there, and then there's elements of, okay, have they built up a reputation that is, they don't want to ruin their reputation. Like how
Yeah.
strong is that? Like I mean, if someone wants to have created such a large a company based on real estate syndication, you kind of feel like, okay, they put their lives in there and they put
Yeah.
their they want to make it work. How likely is it that they want to ruin this relationship with you? And I
Yeah.
think that's kind of like, okay, they have something at stake as well. So,
Yep.
and so you kind of feel like, okay, this seems like a legitimate person that who's really wanting to, um, you know, make good for the investors and do
Yeah.
well and continue moving on to success.
Yeah. So if you're listening to this and you're nervous about investing something out of state or that you've never even seen, you qualify the property, make sure it's real and it exists and there is something that you want to invest in. And then check out the market, make sure it's somewhere that you want to be investing. It's not a D-class war zone area. It's somewhere that you can see is growth. And then you qualify the sponsor, making sure that it's someone who's trustworthy, who you can get into a relationship for 5+ years potentially. Is that fair?
Yeah, that's totally fair.
Yeah. So along that same line, if you had one or maybe two questions that you could have someone who's brand new to this or maybe somewhat experienced to this, if you had two questions to ask the sponsor, what would those two questions be to qualify them, or two or three, whatever you decide?
That's a good question. Um, for me, I think for one, if you can ask them for if they have other business partners or other investors that have invested in several of their deals, that would be great that you can talk to and connect with. That's one thing. If you can ask them, I mean, I would double check and reach out another way to get that information as well, if you can. But if they can offer that up, that would be a good source to get information as well. The other way that I like to do is just I like to do a deep dive on the deal, what they have done in the past, and how successful they are. I guess I would ask like going back in time. One question I could ask is like, what is the last deal you've done, and can you show me the executive summary for that, and how what is the performance it is right now? How is it performing? That kind of give you a little indicator how they've done. So and how open they are in communicating with you.
Yeah, I think asking for references is critical. So that's a great first question. And then asking about past performance could be a mixed bag. Like, I think you should do it no matter what, but of course they're going to pick like one of the better deals, but maybe you could qualify that by asking like, do you have a deal that's not performing the way you wanted it to, or something like that?
Oh yeah, totally. Like, I think the COVID situation is the perfect situation. Like, how have you communicate with your investors through COVID? Can you share some information?
That's good.
How you keep them updated? That really, create the trust and bond. Like it doesn't, I know like you could, nobody expects you to perform very well, but how you communicate with your investor to make them feel comfortable. So that's
you can't, there's things you can't control in every deal, but how you communicate is always something you can control.
Correct. Yeah
Good. Well, just to wrap up, let's ask this last question. What advice do you think you would give someone who is interested in passive investing? Maybe they want to transition to more hands-off approach to their investing, but they're fearful of taking that first leap. What would you say to them?
I think you just one is to peel back the layer of I guess look at what you are investing right now. Is it working for you? If it's not, then you really had to break down the I guess, what do you call it, prejudice or bias you have currently, to unlearn what you know again, and then kind of start reaching out. Okay, what are you asking other people what they're doing, and how did they get comfortable? Like listening to your podcast right now, Lucas.
Great plug, thank you.
And then I guess we'll do your research and follow several people who are doing this actively, and what do you like about them? Or how do you connect with them? Do you share the same goals? That kind of give you comfortable, like you'll be working with this person for the next 5 years in a particular deal. So it'll be nice to kind of know that person up front, like what they stand for. You don't have to invest like the next day, but so just start learning today. That would be my advice. Like, getting closer, read books.
So kind of peeling back those layers, like you were saying, like of prejudice or bias that you have. Sounds like a scam. Yes, it does. And it's okay to think that way. But if you try and unlearn it and try and say, okay, well, how are people doing this, instead of, oh, that's a scam, I'm not even going to go down that road.
Right. Yeah. Because you're already preventing yourself from investing in that potential opportunity. So
yeah, what if it is real and you just missed out on that opportunity? So that's good advice. Well, Maggie, thank you for coming on. I really appreciate it. If people have questions or they want to just reach out to you or maybe just like get to know you a little bit better, where can they find you?
Sure. You can find me at in LinkedIn. I think I share my LinkedIn with you.
Yeah.
So yeah, ping me anytime.
Yeah.
Any questions?
Yeah, Maggie's LinkedIn will definitely be down in the description, but also at fearfreepassive.com. Maggie, thanks so much for being here. I appreciate your time.
Yeah, no worries. Likewise. Thank you,
Thanks.
Lucas.